Hello everyone. This is the final fifth video of Basic English Terminology for Business module. I am Murat Canbulut. So in this final video, we are going to define accounting and finance. After making the definition of accounting and finance, we will be talking about some basic words for accounting and finance. And after completing this module with this final video, you will be able to more familiar with business and management discussions. So first, let's define accounting and finance. So accounting is the function of business that involves maintaining and auditing records, sending out and paying bills, and preparing financial reports for a business. And another definition is, an additional definition is the systematic process of recording and reporting the financial position of a person or an organization. Okay, so please pay attention to the words that I underlined for you. What about finance? Finance is defined as the function of business that involves money management. So after making definitions, defining accounting and finance, so let's talk about some basic words for accounting and finance. So the first word is assets. It's property or other items of value owned by a business. The second one is accounting equation. So you're going to see many times that if you are really interested in accounting. Accounting equation is a concept that states that assets must always equal the sum of liabilities and owner's equity. Okay, so another definition is balance of trade. Is the difference in value between a country's imports and exports over a period of time. So for many countries, so these statistics is published monthly by some institutions, government institutions. So if you are really interested in these statistics and values, you're going to see what the balance of trade of a country is. So the important thing is imports and exports are taken into consideration, and then if the value is minus, it's going to be a negative thing for a country. If the result is positive, then it is very good for a country. So another important concept is balance sheet. So it's a report of the balances in all assets, liability, and owner's equity accounts at the end of an accounting period. So here you may find a simple balance sheet, total assets in one side, and in the other sides you may see total liabilities and total shareholders' equity. Okay, and according to the definition, so all assets, liability, and owner's equity accounts at the end of the accounting period should be in balance. So if you want to read or see more about balance sheet, then you may visit the link I shared in this slide. So bonds is another thing that is very famous, well known in the accounting and finance discussions. It's a certificate issued by a government or a company promising to pay back borrowed money at a fixed rate of interest on a specified date. So governments or some companies, if they want to borrow some money, they issued a kind of paper, okay, a certificate. So they promise that they are going to pay back that money at a fixed rate on a specified date. So it's kind of certificate of promise. So budget is not limited only with accounting and finance. For in many departments in businesses that you see the budget concept. It's a plan specifying how money will be issued or spent during a particular period. You plan and you organize, and if you have plans for the future, considering that the money you have, then you're going to create a plan to specify how much money will be paid, how much money will be needed in the future time. Budget deficit. So when the government spends more on programs than it collects in taxes, so in many countries are facing budget deficit. So there is a very limited number of countries having a budget surplus. So let's move to budget surplus. It's the contrast in the opposite definition of budget deficit, a situation in which a government's revenue exceeds its expenditures during a one-year period. So, as I told you, if you see the statistics of many countries, you're going to see that many countries have budget deficits, while a very few and very limited number of countries having budget surplus. So financial statements are the documents summarizing the changes resulting from business transactions that occur during an accounting period. So credit is another well-known words in accounting and finance. Even individuals are having credits. An agreement to get money, goods, or services now in exchange for a promise to pay in the future. If you are willing to buy something that seems very expensive, or that costs uh, for a money that you don't have now, that you are applying for credits, that it's a kind of promise that you're going to pay that money in the future. Liabilities are the creditor's claims to the assets of a business. So we also talked about liabilities in accounting equation, if you remember it, a few minutes ago. Liquidity, the ability to quickly turn an investment into cash in many cases. So the ability to quickly turn an investment into cash is, if this rate is high, then everything seems to be okay. So interests, a fee charged for the use of money. So if you are familiar with finance or business issues, that if you are following the news, you're going to see some central banks are increasing the interest rates. So it's affecting somehow the transactions, financial transactions in a country. So it's direct or indirect affecting investment plans, or exchange rates, or anything else. So it's one of the important concepts in accounting and finance. Generally accepted accounting principles are called as GAAP. These are the rules that provide a way to communicate financial information to others. And opportunity cost is not only belong to accounting and finance; it's also something we talk in our lives. What you give up when you make one choice instead of another sometimes is called as a trade-off. So it's not only limited, I'm repeating again, it's not only limited with accounting and finance, you also use it for personal use. That's concept. Revenue, the income that governments get from all sources, the money that comes into a business from the sale of goods and services. So what you expect is, so you try to increase your revenues, and meantime you try to also increasing the profits you get from that revenue. Risk management, the systemic process of managing risk to achieve your objectives. It's one of the important discussions in business life. Statement of cash flows, you're going to show, it's a financial report, and it's showing us incoming and outgoing money during an accounting period. This accounting period sometimes monthly, sometimes quarterly can be. So this is the end of for the video 5, and this is also the end of the module for this module. I hope you enjoyed, and you learned something after you complete this module. Thanks for participating.